Let's head to Brampton, Ontario. Karen's on the line. Go ahead, please.
Good afternoon, all.
Hi there.
I own a home. I have outstanding mortgage, and it's coming up for renewal in the next 2 months. And I also have two investment properties. Can I transfer my outstanding balance to the two investment properties? And what would be the tax implication?
Okay, Ron.
There's no tax implication on the debt side. You would have to do fresh applications. So if you want to raise the amount of the mortgages on your rental properties to pay off your owner-occupied property mortgage, you can do so, but it's all a fresh refinance application.
Lauren, any thoughts on that one?
No, I think Ron's got it. I think people are right now looking at, well, I want to hold all three and I can't afford it, and trying to make decisions around, do I sell my principal residence, which is a tax-advantaged asset, or do I try to hold on or sell the income properties? And something to consider right now is selling a tenanted property is very challenging. You will not get top dollar for the property because showings are harder. They may need to assume the tenants depending on who purchases it. And so while it's sometimes easier to sell your principal residence, you then need to find somewhere to move. And so they're very specific questions.
But purchasers, if there's a tenant there, they're like, oh, I don't know.
Well, I mean, if you're touring and you're looking to buy a property for yourself, and there's a tenant in place, then it's a good opportunity actually. And so if you're a buyer in the market right now, wondering how to get in, looking at tenanted properties, you can get a discount.
Oh, that's an interesting angle. Eric in Montreal, go ahead, please.
Yeah, good afternoon. Thanks for the opportunity. As a reference, I'm taking 30 years mortgages in the United States. I'm wondering why they don't offer such a product in Canada. Why a consumer borrower have to go every 5 years to renew the mortgages is a matter of regulation. Someone will hope that wondering if there is any ideas or any plans to have 5 or 10 years renewal or 20 years. This would be far more beneficial to the consumer. Sure. So is it a matter of regulation, or is it a matter of it's more beneficial to the financial institution? So thank you for your answer. Have a nice afternoon. Bye.
Bob Dugan, could you kick off with that? Why are the terms in America so long on these mortgages?
Sure. Well, I think part of the reason that they're shorter in Canada has to do with the Bank Act and how banks are compensated when a contract is broken. And so if for mortgages up to 5 years in length in the Bank Act, banks get full compensations for the foregone interest on that loan. Above 5-year amortization, I think it goes down to 3 months or something of interest. The exact number I'd have to look up. But so so some of the historical reason why we don't tend to have longer amortizations in Canada have to do with the Bank Act. And then, of course, financial markets developed around that. We don't have a very active 20 and 30-year money market in Canada compared to the U.S. in order to raise that money. And so that's some of the historical reasons behind it. We've certainly seen in recent years longer sort of terms. I don't mean to say amortizations there, but longer terms. So you can get 7-year mortgages, 10-year mortgages now. They aren't very common, and it tends to cost you a bit of a premium in terms of interest rates because of the fact that the financial markets aren't well developed around those products yet. But I think the original reason for all this in Canada revolves around the Bank Act.
Ron.
There's also absolutely no consumer preference for these longer terms because they are more expensive. I'll give you an example. There are 10-year terms available. There have been 10-year terms available for a long time. Certainly, it's a great guarantee, 10 years, don't have to think about it. And the uptake on those mortgages are somewhere around 3%. So that is a negligible number in Canada. Because the main consideration is in the 5-year is your lowest cost mortgage. When you compare U.S. 30-year mortgages, they have consistently, almost eternally, been 1% higher than all of our 5-year offerings here. And as you know, consumers in an expensive housing market want the lowest possible rate.
Let's move on to Thornhill, Ontario. Brian is standing by. Go ahead, Brian.
Oh, good afternoon. Hey, Andrew, you wear many hats. If it isn't market call, it's other things. But anyway, you're a great host.
Thank you. Thank you very much.
My call is on for people caught out having to renew their mortgages and consider with the higher interest rate and their premium goes up considerably. Why isn't it made easier to offer those people maybe a 30-year AM or a 40? My experience has been if you've started off with a 25-year amortization, when you renew it, usually the mortgage company says you have to go to a 20-year AM and the payment is significantly higher, and that seems to me putting pressure on people. Why not have a flexible amortization and say to those people, specifically the ones that are renewing, I'm not talking about when you first take a mortgage up,
sure.
Go to a 30 or a 35-year AM, and then down the road, if somebody can afford it, maybe they can revert back to a lower amortization. Obviously, you're paying off more of the prime. But that would certainly, I think, save a lot of people from a dire strait of not being able to renew and losing their property. Thank you.
Ron, any thoughts on that one?
Well, the Finance Minister, Chrystia Freeland, in all of her most recent statements, has made it clear that these financial institutions must allow for reamortization. That if there is distress or financial hardship, that they should apply to their lender, and they could expect to receive at least an increase to 30-year amortization. It's really part and parcel of her last multiple statements on this subject. Now, the bank regulator, Peter Rutledge, remains fairly silent on that issue, but I assure you he knows who his boss is, and it's certainly available to people who can prove real financial hardship.